G'day guys, this is CW from the land down under, and this is our inaugural Hash It Out. So we have Noah and Joe joining us. Welcome guys.
Yeah, pleasure to be here.
Yeah, nice to have you guys on. So what we're going to do here is just kind of pick a hot topic of the week and sort of discuss the ongoings in the crypto community and sort of what's going on in the ecosystem. For those who might not know Noah, he's an avid community member of Ergo. So do you want to give a bit of introduction about yourself, mate?
Oh boy, yeah. I guess most people probably would know me just on Telegram and on Twitter. I contribute to the Sigmaverse Twitter, and I'm always on Telegram and Discord answering people's questions. Part of the Sigmanauts program.
Yes, so for those who don't know, Noah's the face behind the Sigmanaut sort of revamp, actually. He's been the driving force, I'd have to say. So thank you very much for that. And then you're bringing awareness throughout Twitter as well.
Trying my best.
And obviously we all know Joe's smiling face. How are you, mate?
I'm doing well. Doing well. So what's the hot topic that we're gonna?
Well, I can't
this week.
I don't think we can kind of excuse the fact that the market's had a meltdown. So let's kick off there. Obviously, there's a lot going on in the sort of macro environment, which has triggered a lot of sell-offs. So yeah, what are your thoughts on that?
Well, we live in a crazy time. I mean, in terms of like the core macro element at this point is just central banks. They've been kind of driving economic policy. We've seen a lot of printing over the last decade. We've seen a lot of free money airdrop to people around the world, and now we have inflation. Suddenly prices are going up. And, you know, one of the mandates of the Federal Reserve anyway is to basically combat or equalization across an economy, and you know at this point they're kind of failing at their mandate. So it looks like they're going to raise the cost of money, and as a result they are actively, you know, lowering cost of assets, which pain. We'll see how things unfold. It's a crazy time, crazy space.
Yeah, not wrong. You touched on the printing there. Obviously, they've just kind of printed trillions and trillions of dollars and not given a side thought in regards to inflation. That's kind of a bit interesting, I'd just say. I might just leave it at that.
I would just say, you know, oh, go for it, Noah.
I was going to say, to me, it feels like they're trying to prevent panic, but the reality of the situation is we're going to be in this for a while. I think, you know, it's not this is going to get fixed overnight. The global economy is a rough spot, and that doesn't just, you know, a few weeks doesn't change that. We're going to be in this for a bit.
Yeah,
we're going to be feeling it for a bit.
Buy the dip works when they're printing. But when they're raising interest rates, suddenly, you know, buy the dip, it just keeps dipping.
Yeah.
And so we very well may be, you know, still in the early stages of that. It's hard to see how things unwind.
Mm-hmm. Yeah, I was trolling through Twitter today and I saw a nice little meme. It's a picture of someone saying, "Did you buy the dip?" And the guy saying yes. And then the next caption was, "How much did you make?" And it's minus 68%.
Which dip?
Yeah, exactly.
It's painful. You know, we've been in kind of this weird spot for a while where basically the Fed can't really raise rates without creating deals, and can't really lower rates because there's no rate of return anyway in the economy. And so it looks like we're going to see some deleveraging based on them raising rates, and you know.
Yeah, that's going to hurt a lot of people, I think. just not in crypto, but then we've got the housing market. People over leverage there with the price of housing. Stocks, you can see the M2 money supply just going through the roof. Everything across the board. The S&P's just gone skyrocketing, and that's all through majority of printing as well. So obviously that's going to hit a lot of people when that starts to decline properly.
It is what it is. I mean, the macro, I guess part of the reason this industry is popular is because, people don't have a vote in that anyway.
Yeah. Unfortunately so. So the carryover from
what's
all
really
this...
been...
Sorry, no, go ahead.
I'll just say real quick. Yeah, I'll just say real quick. What's really been on my mind in all of this, I guess I feel like the writing has been on the wall for a while now, and it's been very easy to get wrapped up in crypto Twitter and the feeling of, people say like, we're gonna make it, not gonna make it, whatever, like the FOMO on the wall for all of this stuff for a while now. And I guess it's just a reminder, like, don't get in. What is it you say, Joe, all the time? Manage your risks and trade well.
Yeah, manage your risks first. And when you have a money printing environment, it is certainly encouraged risk on.
Exactly.
Majorly.
And there's always a feeling of if you don't do it now, you're not going to get there. But now we see the end result, and it's not so pretty.
Yeah, the thing with crypto as well is it's such a fast-paced environment that FOMO does play a large part in the investment side of things. So people just get caught up in the crypto Twitter side, and then you've got all the 100K plus sort of this cycle bros sort of chanting from the rooftops, and so obviously there's a 10% dip, everyone's screaming buy the dip and everything. Obviously it's dipping now, and it's dipping pretty hard.
Yeah, there's a lot of deleveraging. I mean, that's the natural consequence of building leveraged risk. So, unfortunately, we're going to see where it ends. I'm certainly not an oracle that can, predict all of that, other than just kind of watch from the sideline.
Yeah.
Yeah, one interesting fact as well is I was sort of looking at the charts a little bit earlier, and we're not too far off retesting the old all-time high as well. So I believe that's the first time in history for Bitcoin to be able to do that. It's a pretty big assessment. And then what would be even more interesting is that sort of breaks support, and who knows where the bottom is then.
It's hard to say.
Yeah, and markets will be markets.
In the macro, the one thing that I can appreciate is that this industry, even though I think it's probably moved away from that quite a bit, was somewhat started in resistance to central banks and to the idea of bailouts and money printing and all of the madness that sadly I over the last couple of years I've seen people in crypto print more, airdrop more money into the economy. And, it's especially when, you have supply chain shuttered for a period of time, it's just painful. I mean, I think that anybody really that was looking ahead was like, this might not end well.
Yeah, it's not going to be pretty. But I remember that as well, like a stimulus package in the US was announced or something, and then everyone's just throwing that straight into various markets. So, how sustainable is that?
Not. So. I did. It's like people do things when there's theoretical money to be made. It's funny, like the previous all-time high it's interesting for me to think about this stuff because I got in to crypto in general just at the beginning of this last cycle. And so and I'm a pretty young guy. Like I was pretty young when the 2008 recession happened, and just thinking about the markets, it's very different for me as an adult going through it this time. You know, there's real stress and there's real stakes, and yeah, we'll see what happens.
Yeah, I actually bought my first property in 2009, started 2009 actually. And I was a single guy on a single wage and have this massive mortgage and didn't know what I was getting myself into. But
worked out in the end.
Worked my way through it. It's not too bad.
Yeah, you know, a lot of what we're seeing, you know, Celsius is probably the hot topic this week. Yep. And it seems like the big driver in that was, you know, basically improper risk management.
Yeah, people look at a sort of platform like Celsius and they can see the high APY numbers, and that's all well and good when prices are moving up. That's all no problem. So people are sort of more risk on, as you said earlier, but then in regards to that, you're signing over your crypto. So not, like you said, not your keys, not your crypto. So people are sort of realizing that once they've shut up shop at the moment. So it's not too good.
Well, it's one of those things where it's hard to say what's happening behind the curtain to create that APY, right? Because I'm pretty sure the business model is, okay, see me your money. I'm going to 5%. Then I go and I chase a riskier. Oh, I give 15% and I cut the difference. And then, you know, with the difference, I buy my token, which, you know, is good for people that are holding my token, good for my community when I'm profitable. But in a way, I'm taking an asset and I'm adding additional risk on it, you know, beyond what even the advertised APY is. So to some degree, it's somewhat like a, you know, centralized hedge fund.
Interesting.
Basically,
what do you guys see as, like, if we were to visualize different forking paths of potential futures? How do you see this potentially ending? I know it's impossible to predict the future, but like, throw some ideas at the wall of what could possibly happen to people that have invested in Celsius.
Well, it's hard to say. You know, whenever you have a weak player in trading, there is some incentive for the competition to come and liquidate you and then clean up. So, you know, I think to some degree we have been seeing that, you know, in markets where due to people's risk positions, they put themselves in, you know, a potential to basically forcibly sell. And if I'm your competitor, it does make some sense to destroy you. And so if in like highly competitive trading environments, you know, there are headhunters. So to some degree, we have to ask, is that happening? I don't know. It's a potential.
Yeah, that's often forgetting as well. Sorry, Noah, go ahead, mate.
Yeah, I was just gonna say, I even saw Nexo, which is another lending platform. They offered to, like, take on Celsius's. Man, I can't remember exactly, but it was like they were trying to strike a deal with Celsius. And you talking about potential attackers, like, you know, who knows? That's some tinfoil hat theory right there. Like, if you can stand to gain from attacking your competitors, why not? You know, like, that's the market.
That's the market.
That's it. Yeah. You'll see big players absorb smaller players throughout sort of history in both markets, like stocks and everything like that. So you have, when there's monetary sort of incentive, obviously they're going to try and attack because you can make money on the way up, but then also make money on the way down. You see it in hedge funds sort of buying a company and then just ripping it to shreds and shorting it to hell. So, yeah, you see it. It's many different ways to skin a cat.
Yeah, I mean, even in crypto, for how long have we heard or witnessed, the whale dumps and then cleans up at lower resistance and then is out of the market and sell pressures away. And now, they kind of float to the top with everybody else, Bitcoin or whatever coin we're talking about. That's happened for a long time.
Yeah, rinse and repeat.
To some degree, if you get into that mindset, it's about expansion and consolidation. And so, the downside is about consolidating your competitors, consolidating and securing your position.
Definitely, and that's all it's about, isn't it? Basically, in a simple term, that's all it's about.
So,
do you
go for it? No.
Do you guys see this potential Celsius bomb as a catalyst for more regulation in the crypto sphere? And what does that mean for crypto as a whole?
It probably. I mean, certainly gives ammunition to anybody that's already actively trying to regulate it. And there's quite a few government actors out there, not just in the US, that would love to come in and, take control.
Yeah, I mean, with the whole Luna thing, that was only a month ago. It feels like ages ago, but yeah, just same.
The whole thing with it all is it just adds another notch into their belt, just being able to have all that ammunition there, just to be able to put forward to Congress, whoever the entity is who is going to put this regulation forward, the Fed and SEC, etc. They can all have all this lined up, ready to put into their arguments. So it's not a good thing. Obviously, it is still the Wild West here in crypto, and we don't want to see anyone sort of get liquidated. But obviously, regulation's coming. It's just a matter of how it's going to be done.
Sure. Well, there's a lot of points. I mean, with Luna too, there's a lot of very points of failure that people can look at, right? In terms of transparent risk management or risk assumptions. For Luna, that didn't exist. Market access. In terms of Celsius, I don't think a lot of people know what's happening on the back end. The second is self-custody. If it's not your keys, it's not your coins, right? And calling something decentralized finance and giving it to somebody else to invest and then, give you a return is not so decentralized.
Yeah, Celsius
it's
is
decentralized
a
away from yourself. Go ahead, CW.
Celsius is a funny one in that respect in regards to the claim on DeFi. I guess it comes under the DeFi umbrella, but I don't think they've actually sort of claimed themselves to be a DeFi platform. Obviously, I think they've just always stated out that they're going to be, or they are, a centralized lending platform. But then obviously what risk assumptions does that come along with? Obviously you have to know what you're getting into. And a lot of people just see that number of the APY and APIN and away they go.
Yeah, to a lot of, there's a lot of similarities between that framework and an exchange. You send your tokens into a black box that you don't necessarily have custody of. And there are some financial products that who knows what the back end is. Transparency in that environment is kind of out the window.
Yeah, well, Noah, you had a little experience, whether you wanted to touch on that.
Yeah. Sure. Just for context, I was on with a new app that it was a centralized AMM that was, the developer had created it to provide miners liquidity to sell coins that it was hard to find exchanges for certain. Anyway, around with it, they had recently listed ERG, and I made the mistake of not using a test wallet, and it burned all of my native assets in the process.
Ouch.
Which it was 5 figures. Let's just say that.
Ouch.
It was quite a lot, and it was my fault. And it goes sort of to the KYA, the know your assumptions about how UTXO works, specifically EUTXO with native assets and on Ergo. And bottom line is you have to be careful. And this was an app, not a D app because it was centralized. This was an app that was closed source. So it was one guy running this thing, and I got excited, wanted to test this new thing because that's what I do in the ecosystem is I go out and find new stuff, and I get excited about it. I want to see what it's all about. And yeah, all it takes is one mistake and you're out a lot of money. And yeah, crypto's the Wild West in a lot of ways. This is just one example. Celsius is another example, but
Yeah, so not knowing sort of what's going on behind the scenes, that's the problem. So obviously you've been in touch with the developer and things are kind of working out a little there. So hopefully it continues and it's a little bit favorable or everything comes out in your favor, I guess.
Yeah, and to the developer's credit, it was an honest mistake, and he's fixed it, and there's no ill intention. He intends to try to repay over time. We'll see about that, but it was I think he's acting in good faith despite the project being closed source. But it just goes to show mistakes happen in this industry. When mistakes happen, a lot of risk is involved, or it can be involved, and a lot of real consequence and people's finances, their savings. They put a lot of time and effort into saving go away, and snap it can be distressing, to say the least. I'll just say I'm glad it happened to me and not somebody else, because it would have happened to somebody else, maybe a miner with a bunch of NIDA that had been mining on GetBlock or something. It was going to happen eventually. It was programmed to do it. So if not me, it would have been somebody else.
Yeah, that's a bit of an ouchie. 5-figure ouchie. So sorry to hear that, mate. Hopefully everything sort of works out and you recover and you get back on your feet.
Yeah. I've accepted it. It is what it is.
Well, I think
but it taught the KYA, and in this world of crypto and blockchain, you have to be careful in more than one way. You have to be careful, and you have to treat your wallet as if it was a big stack of cash in front of you. And in the real world, if I had a big stack of cash and some guy over there is like, hey, if you hand that to me and I go behind this something else, hell no. But there's some kind of disconnect when it's a browser extension, and mistakes happen.
magic internet money. That's what it.
Yeah.
It's kind of like I don't know. Some people treat it like a video game, and they certain disconnect from like the real value. But
it's funny
because but that's go CW.
I'm just going to say it's funny because you just see a couple of numbers in a wallet, you chuck a password in, and off it goes into the abyss. We've touched on it a couple of times in the developer updates, but I still get nervous sending my crypto to an exchange and all that sort of stuff, because if you have a wrong letter, a wrong number or something, then it's gone. So you double check, triple check the addresses and all kinds of things. And if you're sending a large amount, send a little test amount first. And yeah, it's just one of those things that I still get nervous about after being in crypto for almost half a decade now, or more than half a decade.
Well, my only answer to that is good. You, to some degree, you should kind of have the assumption that you're always under attack, because you could even, click a keystroke logger or click the wrong link on Discord, or, there's a lot of actors out there that are trying to prowl around.
Yeah, there's a lot of phishing to Discord where maybe the admins get phished and then there's a fake link and it drains people's wallets. Like, it happens all the time.
Yeah, we see that with a bit of a famous wallet as well. Not naming any names, but the way that was sort of set up and developed, it's if you have an NFT in there or something along those lines, then you can come back to see your wallet liquidated, which is not the best news.
Yeah, I mean...
Sorry, what? Go ahead.
Oh, I was just going to say, I think that it's wise to operate under the assumption you are always under attack.
Yeah. Well, there's no one backing you up. It's yourself against the world. You don't have the big military there or the big government sitting behind you to try and protect your interests. So ultimately, it's up to you.
Mm-hmm. Something I've been trying to do in the last week since that burn happened is get community developers on board with creating guardrails for users. And it's not something that can really be like an ergo improvement proposal, because it's up to the wallet developers. It's not something that can be really like a core protocol, but having some community standards, I think, is a good thing, of visibility into what your transaction is doing, even if it's not down to the specific UTXO and what's happening with that UTXO. Just having a burn warning if there's going to be a burn, and Nautilus Wallet has implemented that, and I'm very grateful for that. I think it's a really simple, effective solution that will help a lot of people, and I know other wallets are getting on board too, so very pleased to see that.
Yeah, I think Nemo put out an update pretty quickly after that on Twitter, so I think that's been released into the store as well, I think.
Yeah, it was actually already buried in their roadmap. Unfortunately, it
had to skip a few, jump the queue.
Just a few more days. No, it's okay. It is what it is.
Well, sorry to hear that.
It's like I said before, it would have happened to somebody else, and I am in a position where I can keep going. I know there's a lot of people in crypto that they don't have a lot and throw in everything with the hope of getting something more. And, for somebody like that, it would have been a lot more devastating. So I'm just glad it didn't happen to somebody else.
Yeah, that's an interesting point, because you see another macro condition is obviously the housing prices, low wages, all that sort of thing. Everything's the prices are through the roof. So people who might not have the means to kind of carry themselves through, put what they do have into something that's high yielding, or with the intent of being able to pull out at an accumulation of funds. It's sad to see, because often they're liquidated and playing with money that they can't really afford to lose. And it's sad that the economy's in the state that they feel they have to do that to try and get ahead.
No, it really is. That I think that kind of is a nice segue into counter-economic tool to use crypto to create the circulation of exchanges, goods, services parallel to kind of the fiat or money economy. I think that is a solution that, depending on how bad inflation gets, may be more and more attractive to people. That way, they have some ability to adapt and basically be economically active without that cost overhead.
Yeah, and obviously things like Let's provide a ground for that. And if you might not have the funds to be able to spin up a business or something like that, you might have the skills to be able to offer someone, and you can barter something in exchange. And that's a really interesting use case because, in my opinion, that's where crypto stems from. I think it was in Bitcoin. In the Genesis block or something, in the brinks of the banks are on the brinks of collapse and all that sort of stuff. And now we're finally seeing that once again. And this is the first test of crypto with the basically on the close economic sort of deterioration falling through the ground. Crazy.
And everyone on this call is in this world, so that same pressure, stress, is going to be magnified in markets that aren't as developed.
Mm-hmm.
Exactly right.
It seems to me as the markets, crumble, crypto projects that, let's just say, don't have strong fundamentals, as they sort of wither away, I'm sure there will be a next time, but during this time at least, it feels to me like blockchains like Ergo present, it's like you were saying about counter-economic opportunities. And what am I even trying to say? It's just like when all the hype goes away, there are still opportunities for good in what we're trying to do,
It just stems on the whole ethos of the manifesto. If you read that, it's just basically everything that's in that is saying Ergo is built for this type of environment.
Well,
right. I think it talks about.
Oh, I was just going to say, I think that's kind of where the original ethos of crypto is much more focused. Originally Bitcoin really didn't have much of a market. It didn't have the, I guess, the moon attached in that environment. Where now that price appreciation relative to fiat is the primary driver, and to some degree, I think saying, okay, well, if we're actually going to decentralize, if we're going to get rid of intermediaries and we're going to go more peer-to-peer, how can we encourage the creation, store, and circulation of value? That's a big question.
Yeah, and the resilience on top of that as well.
Yeah, and I do think that there's still a real use case for that. Especially when you get into the type of thing that Chris Ray's been working on with, what is it till now?
Excel.
Yeah, I'm gonna think Ergolend for like 2 years. I'm sorry.
Yeah. I wanted to bring up his project as we were talking about this, just to give it a little visibility. Honestly, there's a few proposals. People in Kenya trying to open, grocery stores or things like that, and it's kind of tough right now because people where we're at, people aren't in a position where they feel good lending money. Times are tough, but that kind of tool presents a real opportunity for real use case, like you were saying.
Yeah, well, a lot of crypto has kind of gone towards like token trading. I think if we could
Governance
get
tokens.
governance tokens, if we could get things off chain, real world, and start getting people to engage, I think that would really offer a lot of value just beyond fiat returns.
Mm-hmm.
Yeah. Oh, sorry. I'm just getting over a cold and my voice just went then. What I was just about to say then is, like I myself, I do Kiva loans. I do 1 or 2 a month, and going to start flipping that over into X or ErgoLend. But as Noah just said, the environment at the moment is not the most favourable. So obviously all the purse is starting to tighten, and you have people there who are willing to put in the groundwork and try and get their businesses up and running in, say, places like Kenya. But then the whole macro environment sort of doesn't play into that, being able to do that.
Yeah, I kind of, it's a weird feeling knowing you have more than another person, and maybe this is getting too real, but it's a weird feeling knowing that you have more than another person and you don't feel comfortable being willing to share because of potential economic risk.
That plays into the
tough.
inflation side of things. The housing markets are different. Fuel is different. The cars are more expensive. And for some reason, we get wrapped up into that keeping up with the Joneses sort of lifestyle. And obviously, like you said, people on the other hand might not have the need for half that sort of stuff. And obviously, I know what you're saying. It kind of makes you feel guilty in that respect and not being able to share.
Yeah, it's a weird one.
No, I think it's good to look at that, because the reality is that to some degree it also breaks down to what's the cost of you carrying your life.
Yeah.
And that's different from person to person to person, to where even though you may have one person that, sure, they may not have much, their cost to carry their current reality is much lower than somebody that from outside appearances is doing well off. Well, what's their debt situation?
Right.
Risk. Sense.
Right.
It's a hard thing to carry through time in life.
Got a really good example of that, and a colleague and I used to sort of discuss this at length. And the way it kind of stemmed was, we're sort of busting our butts to work our way up a ladder or build a business or whatever we're doing in life. And then on the flip side of that, you've got the guy living out of his van. All he cares about is a doobie here and there and jumping on his surfboard and going for the surf in the morning. Like, not a care in the world. Money's so far off their mind. And they're the happiest people. You always see them with a smile on their face, and other people get sort of wrapped up in that other side of it and trying to better themselves through perception, I would say, from other people's eyes, trying to climb the ladder and just trying to have that social sort of benefit. Whereas the old mate's sitting in the back of his van having a doobie and just waiting for the next break.
I'm not going to make a joke about the van on your desk. I'm not going to make a joke about the van on your desk.
There you go.
Well, I had one once, so we'll leave it at that. Oh dear.
But no, I think that's an important.
It's a reminder to get time away from all this stuff and go outside, work on some wood, touch grass.
Real
I
life.
don't have any. I don't have any beaches to go sit on and
Yeah.
around where I am, so I go out in the forest.
Yeah.
Well, you never know, mate. You might be beachfront one day.
Monday. Everybody else is gonna be in trouble if it makes it that high.
But yeah, everyone sort of says when Lambo and stuff. This is always my sort of reminder just here. That's what I'm working towards. So I'll get another one of those one day.
When VW. That's a VW for CW.
Yep, when VW. They're expensive here now.
Well, I think that's
crazy.
It's everywhere. I think it's an important thing to really look at is like the cost and stress of carrying your life and the level of enjoyment you have. And the reality is, I think for humans, they're controlled by fear and money more than any two other things in life. So, I guess each person be conscientious of the level of grasp those two things have over just your day-to-day reality.
Yeah, it feels like a good note to end on. Like, don't get too caught up in the horse race, and make sure you're taking care of yourself. Make sure you're not too online. It's times are tough, and you got to take care of yourself.
Yeah, by all means.
Live well.
Yeah, manage your risk and live well.
There you go.
But yeah, definitely you have to get out there. People will sit and stare at the charts, and when they're down this much, it's just not healthy. Just get outside and go for a walk, feel the sun on your face. Just go and enjoy nature or whatever pleases you. Sit and watch Netflix if you want to, but just get away from the computer because crypto's not going anywhere. It's 24/7, and it'll be here when you come back. So, all right, guys. Well, thank you very much for joining us on the inaugural Hash It Out. Is there any final words?
Yeah, I would just recommend that everybody out there, whenever we have an event with Alex, he always says have fun, right? And I think that's a good way to end this. Is whatever happens with the internet money for the next hour chart, 4-hour chart, weekly chart, 2-weekly chart, have fun. Don't let it eat your joy in life.
Exactly.
That's true.
All right, gentlemen. Well, thanks very much for joining us on this week, and we'll leave it there. Thanks for watching.
Yeah, thank
Have
you guys.
a good one.
Cheers, guys.